Stream. Here we go. There we are.
There. All right. There you are.
Yeah.
Woohoo!
We gotta turn off the phone. Sorry.
Wow.
Okay. Awesome.
Okay, great. Now let me turn up the volume on my computer screen so I can hear you.
Yeah.
There you are.
Awesome. Yay. So welcome. I just wanted to thank you. This is our first Lyonsview Realty Financial Fridays, and we were having a few technical difficulties. So for those of you who are just joining us, thank you for hanging in there with us. Hopefully you can see us okay. And just wanted to say that Lyonsview Realty is committed to ensuring you have information to assist you in making the best financial decisions. We want to help you maximize your wealth building power, not just now, but in the future. So Financial Fridays helps you stay current on trends that impact your bottom line. And today we have Steve Campagna. Am I pronouncing your name right?
Campagna like lasagna.
Campagna like lasagna.
Easy to remember it.
Yes, I want to welcome you, Steve. Steve's the originator from Princeton Mortgage, which is a 2025 star mortgage professional.
Thank you.
Yeah, what does that mean to be a 5-star mortgage professional?
The 5-star mortgage professional, it's an organization where they interview other people in the industry, and it's awarded to less than 1% of loan officers in our area for exceptional customer service. So I've won it for 8 years now. So we do care. It's not just the job to me. This is what I do. It's what I love to do. I love helping people purchase homes and helping them go from renters to owners and building wealth with real estate.
Awesome. Well, I met Steve at an open house, right?
Yes, that's right.
Yeah. So he and his wife came through an open house that I was having, and we struck up a conversation, and we've been keeping in touch ever since. I really appreciate, because Steve sent me some information about some changes in the FiCO score. So we're going to talk a little bit about that. But before we get into that, Steve, can you talk a little bit about how mortgage professionals use credit scores in the home buying process?
Sure. Basically, there are 3 pillars upon which a mortgage pre-approval is built. Okay. One of them is credit. Credit is pretty much a history of, well, how well do you pay back debts? Because you got to think of it this way. When you come to a mortgage company and you want to borrow money, well, they want to say, well, are we going to get paid back? That's the number one thing we want to see is, are we going to get paid back and paid back on time? Which is only fair, because if you lent somebody money, you would want to know the same thing. So the credit is a huge piece. That's one of the main pillars. The other is income, and the other is assets, or money in the bank. But today we're going to focus on credit. Credit is really a history of how well do you pay your debts back. And a lot of people have had some credit issues. Maybe they weren't instructed properly growing up as to how to deal with credit. And there's a couple of things about credit that a lot of people don't know. A lot of times people will come to me and they'll say, oh, I was working on my credit. I think I'm ready to go. And I say, oh, well, tell me what you did. And they do things that actually hurt themselves instead of helping. So it's always good to have a conversation with a mortgage professional, even some credit repair companies that can guide you and direct you in that process. Awesome. Did you want me to explain about the different types of credit and that sort of thing? Or
yeah, that would be great.
Sure. All right. So basically, credit scores are derived. There are different kinds of credit scores. A lot of times, I'll run a credit report and get a lower score, and the people are like, "Hey, why is your score so much lower?" Right. Because if they're on Credit Karma or they have a credit card or something like that, they'll get a much higher score because that's a consumer report. Consumer reports are graded differently than mortgage reports. Right. A mortgage is obviously a more serious debt than a credit card or a car loan.
True.
They can always come and take your car back if you don't pay. And the credit card, they could just shut it down. Right. But a mortgage is a pretty serious debt. So our grading process is stricter, and that's throughout the industry. So that's one of the reasons why we'll get a lower score. The types of accounts, things that will build your credit, is you want to have a couple of varied types of accounts. Sometimes people will say, oh, I took a personal loan to help build my credit. That actually doesn't help as much as a revolving account. like a credit card. So, credit cards aren't bad. It's just like money. It can be used for good or it can be used for bad. It's
Indeed.
how you use it that is the key. It's the usage. And I do have an email that I send out to people that are having credit issues, and it's called My Steps to Improve Your Credit Scores. And it gives them some pointers of things that they can do. Like the biggest thing is keeping credit card usage. I know everybody's heard that 30% mark, and that's
Right.
true. To get the actual maximum bump is 10%.
Yeah.
If you use only 10% of your credit, you
Yeah.
will get a serious bump in your score. So usage is a big part. The other thing is the types. It's good to have a varied set of accounts, like maybe a car loan, maybe a credit card, maybe something different that the different types of loans that are out there. So and then the length of time that an account is open makes a difference.
Yes.
The longer an account is open, that's more history they have. So
Yeah.
that also adds to it. So whenever I'm talking to somebody and I see they have limited credit, I'm like, open a credit card immediately. Even if you have to do a secured card where you give the bank $300, they in turn give you a credit card. And I explain all that in the email as well.
Right, right. And then the total usage, because sometimes people don't know what that means. So if you have a credit card and your score or your credit limit rather is $2,000, we'll just use that as a number, and you have another one where your credit limit is $5,000, then you have $7,000 of available credit. So you want to keep it at 10% or 30% of that total $7,000 that you have available to you overall.
Right. I'm talking with somebody right now who she pays all her bills on time. It's just that those cards are all at like 95%, 85%, 90 of the available credit. So if a card is, let's say you have $1,000 limit, then it should never go over $300. That's really the key, is to keep it. It just makes such a difference. And those are quick turnarounds. You can turn around a credit score very quickly by paying down those debts, and we can get a bounce by the next month. It's that fast.
Indeed, indeed. So these are the kind of things before, people want to get started, they should consider, one, pull their credit and have it pulled through the lender, because as Steve is saying, it's a different scoring process for mortgage than it is for regular consumer credit, and then see what's going on with that. So there's some things that are changing, and I don't think a lot of people are aware that FiCO occasionally changes their guidelines for scoring credit. And I think the last time they did it was in 2014, and they're in the process now of doing it again. So that has some impact. So, what are some of the pros and cons with these potential changes that they're thinking about doing, Steve?
Well, the notice that our company sent out is that those who have credit scores below 600, these new changes are going to hurt them a little more, unfortunately. So whereas usually I was able to take somebody from the high fives and easily make some suggestions and bounce them up to 620 or 640, it's going to be a little more difficult now. Those with the stronger scores, it will actually help their scores go even higher. So it's really important to keep on top of our credit and make sure that we're paying our bills on time and not overextending ourselves.
Yeah. So, like, if they have a 680, it's going to bump them up a little bit higher.
Yes.
If they're in the lower 600s or in the fives, that's going to dive them down.
It's going to take a little more work to get them to where they will be mortgage ready. Typically, and I probably should mention this, you'll probably see ads saying that, oh, we do mortgages down to 580. But what they're not telling the people in that ad or that comment that they make is that it's very expensive for those people. Yeah. So I always try and help them get the scores up, because every 20 points that you move up, it's the little brackets of 20 points, 20 points, 20 points. Every 20 points makes a difference in the cost. And obviously, the higher the credit, it's less risk to the lender, and therefore we can give you a better rate and lower costs.
Indeed, indeed. So are there any best practices that you would suggest to people who are thinking about purchasing a home that would impact their credit or even their ability just to get a mortgage, that they should or shouldn't do prior to going into that process?
I'm glad you asked that. I do have a printout that I send out when I send my loan documents for the, and I'll bring that up. basically, when I send my list of docs needed, like pay stubs, W-2s, tax returns, I send out a flyer attached to it called the 7 Loan Killers. One is do not open a credit card. Now, that's once somebody's in the loan process, or if the credit's already established, they already have a pre-approval and they're moving forward. Do not open any new credit. Also, don't close any credit. Sometimes closing a credit card will pull a score down.
Right.
And do not max out or overdraft anything.
Yes. Yeah.
Don't co-sign on any loans, because as a co-signer, you are also 100% responsible. It's not 50-50. Each party is 100% responsible. So
And that's something that people don't don't realize when they're co-signing that, that they're not only are they liable for all of that debt, but they also take on ownership of all of that debt for anything that they want to do
yes.
moving forward. Yes.
So and then the third piece of the puzzle, let's see here. Don't sign any don't make any large deposits. That's another thing. People will say, "Oh, well, I've got 5,000 in a safe at home." That's great, but any funds used to purchase a home must be able to be traced. So paychecks are great because we could see it was from the employer, or a tax return is great. We'll see it's from the IRS, but anything that we can't trace, we're not allowed to use.
Yeah.
And then don't change jobs. It's,
Yes.
I did have this happen to me. We did a verification of employment, because we will check the credit and we will check your job to make sure you're still there. We'll check the credit to make sure you didn't take on any new debt a few days prior to closing. And I've had these situations come up where somebody changed their job. They never told me. And somebody else who opened a credit card and disqualified herself. So we had to jump through some hoops to try and figure out ways. We did get the loan closed, but it definitely put extra stress, and we had to jump through some hoops to make it happen. And also, it says don't accept any large financial gifts. Gifting is allowed, but there's very strict guidelines to that. And I have another email that explains how the gifts work. It has a gift letter in there that gets filled out by the buyer and the donor, and we explain all that.
Awesome. Awesome. Well, those are some really, really, really good tips. I think the biggest one for me is people don't realize how changes in their financial situation, especially when they're in the middle of the process, really impacts them going into settlement. So I'm glad that you mentioned that one as well. So share with everybody your contact information. If people wanted to get in touch with you, how would they do that?
Yeah, the best way is my cell phone is also my business line. It's 856-534-2780. That's 856-534-2780. My email, it's kind of a long one because with a name like Steve Campagna, it's S Campagna. I'll hold this up briefly. I don't know if you can really see that very clearly, but
it's kind of small, but
yeah, that's what I figured. It's S Campagna at PrincetonMortgage.com. Or just call or text me. That's the easiest way. 856-534-2780. I also tell people to Google me so you could see what others had to say about working with me. I have a Zillow page. I believe I have 106 reviews on my Zillow page. So get to see what others say.
Awesome. Awesome.
And I look forward to being of help. And I do have some good credit repair people that I could recommend if you're in need of that
as well. Awesome. So I want to thank Steve again, and thank those of you who are watching. If you found this information useful, like it and share it with others. And if you're looking to buy, sell, or rent, you can reach out to Steve and also any of our associates at Lyonsview Realty. Drop a message in or a request for an appointment here on Facebook. And you can email me at info@Lyonsview Realty. That's LYONS VIEW or call us at 856-209-0905. And join us again next week live, and we'll have it together. Now I've figured out how to do this for our Financial Fridays here on Facebook. So we really want to help you stay current on those trends that help you maximize and impact your bottom line. So thanks again, Steve, for joining us.
My pleasure. Thanks for having me.
Everybody on Facebook, we'll see you next time.
Sounds great. Bye-bye.
Bye-bye. Yeah, so I want to end this broadcast. There it is. Okay, I really appreciate those of you who are bearing with us. This is our first Financial Friday, so next time we'll have all of the technology straightened out. Take care. Bye bye.